Hello, hi, very good evening. Hope my voice is reaching you. All right. So, without wasting much of our time, we will start our presentation. So, first of all, thank you for attending today's presentation. We really appreciate your presence. Before I dive into the subject, I will just give you a brief about me and the company I associate with. I started my career in 2005 in Bangalore in a stockbroking company. There, it was mainly into buying and selling stocks for our clients based on based on the fundamental and technical analysis which my company was providing on a regular basis. So I continued in Bangalore for about 3 years, and after that, in 2008, I came to Dubai and I started working for Elixir Wealth. Sorry, I started working for Barclays Bank Wealth Management Division. So at that time, it was like a dream job for me because um, it was a multinational bank, and but in Barclays Bank, um, the job was more of a sales job rather than you know considering like it was like on a daily basis you have to go and meet people and you have to sell products there, but that was not what I was looking for. I wanted to be an advisor always. So but I had to continue there for about 2.5 years. After that, I became an independent advisor and I started advising on mutual funds, ETFs, stocks, etc. And that's how I started working for Elixir Wealth. So I started working with Elixir Wealth in the year 2015. It's been almost 8 years now. So here, actually, we are a DIFC based company. DIFC is Dubai International Financial Center, and we are a DFS, a regulated company. So whatever I discuss with you today and talk to you about today, everything is regulated by the UAE authority. So, um, so based on my 16 years of experience, almost 16 years of experience in UAE, I actually could find some challenges my clients were facing. It was all some common challenges. When I say common challenges, the first and most important challenge that I could see that in dollar terms, most of the people here in UAE they invest their money, but most of them are not getting adequate returns from the investment. Uh, so if you look at the market, if the market is not performing and you are not getting returns, yes, we understand that. But if you see the market, for example, if you see last 5 years story of the market, there were lots of ups and downs in the market. There was a crisis in 2020 during COVID, and in 2022 again there was a crisis because of Russia-Ukraine war. That led to energy crisis. That led to inflation and all. So, irrespective of all that, there are pockets in the market where funds and ETFs had performed really well. There are funds, which has given more than 25 percentage return, more than 20 percentage return. If you are from India, most of the Indian funds have given, in dollar terms, have given more than 17, 18 percentage return. So it is market is always giving very good returns, but somehow we don't get returns from the market. That is one of the challenge that I see happening in this part of the world. And the second challenge that I see is that most of the investments are not aligned to their life goals. For example, most of the people wants to stay here in UAE even after retirement, or they might want to migrate to somewhere else, or they might want their kids to go somewhere abroad for studies. With an intention of doing all this, they might go and buy a property in India, or they might go and invest from a ordinary bank account from India, or they might invest in FD, things like that. So that is, most of the time that is not aligned to your investment goal of settling here in UAE or anywhere else in the world. And the third challenge that I could see, that was most of the people are not aware of the charges um, with the products. So that was the third challenge that I could see and understand. So that's how. So go to next slide.
Okay.
So based on all that, what we actually tell our clients is to have a strategy to invest your money, and this strategy is invest long term and trade in short term. When I say trade in short term, it is not that we trade on a weekly or monthly basis. One trade might happen once in 3 to 4 years, depending upon the market condition. So, so the major portion of this strategy is that we, with an intention to keep it for a longer period of time, based on the fundamentals, we can invest in in an instrument like this. This is one of the instrument, but actually we will be investing into five to six instruments. Some of them are market linked, some of them are not market linked. I don't want to explain all the instruments, but I just wanted to focus on one instrument and explain that to you, so that you will have an understanding about this instead of confusing you. So this instrument, if you see, this is called iShare Semiconductor ETF. Most of you might be aware of iShares. This over the last 5 years, this ETF has given close to 200% return. That means somebody who has invested 100,000 5 years back, today the value of this instrument is 300,000. So that means on an yearly basis, on an average, this ETF has given an average return of 30%, close to 30%. So that's how it became, 200% return over a period of 5 years. So this is one of the instrument we invest in. But at the same time, when we talk about the strategy, we don't expect this instrument to give 30% or 25 or 20% return. We expect this fund or ETF to give around, let's say, 11 to 12% return only. So the first expectation is to get 11 to 12% return from an instrument like this, from an instrument which we are investing with a long-term view. So the next part of this is if you have look at this, this is called again, it is a semiconductor ETF, but it's a leverage strategy ETF. This is Derrickson Daily Semiconductor Bull. So that how it works is like, if you are investing into this ETF, and if the market goes up by 1%, instrument will go up by 3%, because it's a leverage strategy ETF. If the market goes down by 1%, it will go down by 3%. So this will have compounding effect both ways. Because of the leverage strategy, this fluctuates quite a lot. So if you look at this graph, in 2020, when the markets came down, this NAV of this ETF has gone down to 4.26. And in 2021, when the markets went up again, from 4.26, it went up to around 68. So you can imagine how many times it has given, how many times it has performed. So somebody who has bought, let's say, at a NAV of 6 or 7 or 8, and if they could manage to sell it at 50 or 55 or 60, uh, he would have got more than 6 to 7 times returns from this instrument. And in 2022, when market started crashing again this instrument came down to around close less than 7%. So I was actually closely monitoring this instrument, and I could manage to buy for some of my clients with smaller amounts, because I wanted to see how the behavior of this ETF. And again, from I could manage to get it at, let's say, around 8.5, and again it went up to more than 50 and came down to 36. Now if you look at it, it is around 40. So it fluctuates quite a lot. So my idea is, the amount we are investing in, we are investing with a long term view, where I don't really expect a correction in the market in the coming 2 years, 2 to 3 years, so that we can invest with a long term view. And once the markets are up, because we are diversified our investments, we could take out the money and wait for a correction to happen. And when there is a correction happens, which might happen maybe after 3 years or 4 years, or maybe after 5 years, we don't know exactly. But when that happens, with the profit, whatever we have made, for example, if somebody is investing 300,000, and that 300,000 becomes 400 or 450, we take out 100 or 150 when the markets are down and invest into an instrument like this. And we can expect, this is ultimately, it is semiconductor ETF. Semiconductors are like, as you know, everybody talks about semiconductors now, and it has to come up irrespective of what happens. So when it comes back, for sure it is possible to get 4 to 5 times returns for sure. So if there are two things needs to happen. One is our long-term investments needs to give around 11 to 12% return, which is very realistic. If you look at your Indian mutual funds, I'm sure you all might be investing in India. Indian mutual funds might be giving more than 20-25% return for you. If you take last 5 years, semiconductors are giving that kind of returns. Artificial intelligence funds are giving more than 20% returns. I don't expect these funds to give 20% returns in the coming years. Instead, I expect them to give 11 to 12% return. But at the same time, I expect one correction in the market. And if we can time towards a certain extent, we will be able to, somebody who is investing 300,000, we can talk about close to 1 million US dollars over a period of, let's say, 6 years time. So that's the expectation. That's the strategy we are trying to implement, and we will implement it this time. And hoping to get at least 3 times returns in the coming 5 to 6 years. That's what we are aiming at. So now, coming back to our vision, what we are planning to do is that I come across people on regular basis. They are investing 500, 600,000 US dollars, or maybe 400,000 US dollars, and they are happy with 6 to 7% return, or maybe sometimes lesser than that. If we continue to have same mindset, we are not going to reach anywhere. If we're happy with 6% return, we will continue to get 6% return. So instead of keeping the money there itself and getting 6 to 7% return, we actually show our people how to aim high. Somebody with 350 or 400,000 US dollars, how to aim for 3 million or 4 million US dollars or beyond. And we will show them how to reach there. Yes, of course, it is an optimistic view. It is a very optimistic view. But at the same time, if you look at it, I'm talking about getting 11 to 12 percentage return from a normal market. But only thing I'm saying is that we need to get one correction in the market, and we need to enter when the markets are down, which we will be trying to do. If we can achieve it, we need to achieve it, once in a lifetime. And you we all will be in a different situation in that case. So that's the idea we are planning to have. So again, going to the next slide, as per Robert Kiyosaki, it is not about how much money you make, but it is about how much money you keep aside and how hard that money works for you. So your money needs to work hard for you. That is the main thing. And how many generations you are keeping it for. So that's how we can create wealth. Um, we need to keep it in places which can really work hard for us. And asset allocation plays a very important role. As per studies, around 86% of the returns are based on asset allocation. If we are investing in wrong places, uh, might not be able to get expected returns. So we need to make sure that we are investing our money in right places and making it grow. So, so again, by systematically keeping aside your money and reviewing it on a regular basis, that will lead to wealth accumulation. So that's it from me. If you have questions, please you can ask me. I can try to answer those questions. Sama, do you come across any questions? You can actually chat with us. You can type your questions. We'll try to answer those questions.
So yes, we have received some, and I should just list out the questions. The first one is, what's your qualification?
Okay, my qualification, I have done my Amphi certification, which I did when I was in Bangalore. And I have NSE derivative market dealers module. I have passed that exam. And after coming to UAE, I have done CISI, which is Chartered Institute for Securities and Investments. I have done level 4 of CISI, and I got CII award, which is Chartered Insurance Institute. It's a UK-based qualification to do wealth management.
Yeah, the next one is, how do you expect to time the market? And when everyone sees it is difficult to time the market.
All right. So I'm not saying that we are going to time the market. What I was saying was we will be diversifying our investment. We will be investing that money not only in equity market, we will be investing into other instruments, alternate investments as well. So that when the market goes down, we can take out money from these instruments and invest at lower levels. That is one. Second is, if you look back in 2021, when the markets were going up, we knew that the markets were overpriced. We had a fair idea that there is a possibility that the market could go down. So actually, we could manage to manage our portfolio based on those informations. And when the markets were down in 2022, we knew that this was the time to enter. So we get a fair idea about market. It's not that exactly, we can time the market, but we get a fair idea about the market, and we act based on that idea, based on gut feeling. Sorry, I could not hear the question.
Okay. The question is, what are the alternative instruments you're proposing, derivatives or futures?
Okay, this might be like alternate investments are, there are many options with alternate investments. For example, you might have heard about hedge funds, long short funds. There are life settlement funds. These all are a little sophisticated investment options, which actually it is difficult to explain in a presentation like this. If somebody wants to meet in person, we can discuss about those. We can discuss in detail about all these things. You might have heard about hedge funds and all. This all comes under alternate investment.
Okay, so the next question which is asked is, what are the steps to open an account, and do you want us to transfer money to your company account?
So we don't. Okay, so if you are an Indian, you might understand this. We actually uh, we open a Demat account, same like that. We open your account with a platform or a private banking platform, and you can transfer your money from your bank account, from your UAE bank account, to your international platform. And once the money is in the platform, we discuss and decide where we invest that money. So we don't directly uh, take any money in our account. We actually open your account in a separate platform, and you can directly transfer your money from your bank account.
The next one is, how does leverage strategy ETF work?
All right. So as I said, if we are talking about 3 times leverage, that means if market goes up by 1%, this will go up by 1%, and if the market goes down by 1%, this will go down by 3%. So the point is, we don't have any risk associated with it. It's an inbuilt strategy. We don't have to take out any extra money to do this. So they are actually managing it with futures and options. So there is no direct, you know, problems we face to invest into these strategies.
Okay, the next one is there any difference between you and a financial advisor?
All right. So if you are coming across financial advisors, if you already have a financial advisor, his job is to plan your finance. For example, if you have a goal to send your kid to a foreign university, he will plan. Let's say if it is after 10 years, how much it is going to cost at that time, and how much you need to save on a regular basis to reach there at a rate of, let's say, 7% or 8%. Then you slowly start planning towards that. Or if you have a lump sum amount, how much you need to keep aside now to reach that goal. That's what a financial advisor is doing. Or if you have a retirement goal, you can, plan. He will help you to plan your retirement. But what we are doing is, we mainly do portfolio management for our clients. We actually uh, advise our clients on investments, and we try to maximize our clients' returns by investing in right places. That's the difference. And we regularly um, like uh, talk to clients and get their feedbacks as well. If you have more questions, you can actually send us a mail, or you can WhatsApp us. We will be happy to reply back to you. So thanks. That's fine. Yeah.
So yeah, I will just list out just one more question. So one is that, so how easy is it to withdraw funds out, and how long does it take?
Okay, so we actually, all the instruments we advise are open architecture platforms. That means we don't, that means you can invest your money and withdraw your money at any time. There is no restrictions at all. If you want to invest today and next month, if you want to take out your full amount, you can do that. There is no restrictions at all. We don't, there's no contracts, there's nothing. But we always suggest to keep it for a long period of time. Then only, we can work on our strategies and make it grow. But if there is an emergency or if you are not really happy about the performance of the funds, you can always withdraw your money and go. There's no question about it.
Okay. We have been receiving like a lot of messages again, so I'll just read out the one final one. Uh, which market do you invest in, and what is the asset allocation? Equity, debt, ETFs, options, CDF, and is it equity direct?
All right. So actually, again, it depends on different things. It depends on how much money you are investing in. It is about how much time you have. Uh, that we have to actually, I cannot generalize things and give you a portfolio. It depends on you. I will ask you questions and I will tell you how we are planning to do, and based on the conversations we have, we design the portfolio. um, so that's how it works. There is no ready-made answer for that. Yeah, I hope that's it. So thanks a lot for your presence, and looking forward to meeting you if you are interested. Thank you.